and look at the plots, which doesn't add a lot, to be honest, but there's one thing that I like about it. Okay, so we get the detrended normal QQ plot, and we get the normal QQ plot, and we can see that these are not hugging the line, and that it looks like there's right-tailed skew by these observations being way out here, and that's again the 150 and 200 volume observations. And here's the I guess you call it a box plot with identified values, and we can see that these outlying, so volume of 200,000 shares traded corresponds to day 1, ID 1, which is the day before the announcement. And then the next most frequently traded day was day 5. And then the next most frequently traded day was day 6 before the announcement. So it looks like there's some suspicious behavior taking before, but it looks also that on day 5 and 6 that there was probably some abnormal trading activity in this stock. And then the next one is day 52, and so I'm less inclined to think that that one is as well. But then the rest hover over here, and then the vast majority of days are in this section of the box plot. So day 1, 5, and 6. And when we test that statistically significantly, if we go on to day 1, 5, and 6, we can see that day 1 is definitely statistically significant once I've adjusted it for the Bonferroni correction. And we can see that day 5 is also statistically significant, but day 6 just quite isn't once I adjust. Oh, it isn't once I adjust it with the 75. That's a pretty harsh. It's what people, strictly speaking, people should be doing, but people rarely do it. That there's probably not very much confidence in suggesting that there is abnormal trading on day 6. And if we keep going down here, we find that none of the other days are also suspicious based on this. Day 52 almost, but not almost. It's like not even close to 0.05 to be honest, but it's one of the lower values, and everything else is in the 50s and 60s. So the day before IPX was traded, we're extremely confident that this is an abnormal trading day for this stock. There's a much greater volume of trades on this stock, even when we control for the number of tests we've done. And also, if I'm being conservative, that this distribution of data is very non-normal, so I'd want to be even more conservative, so maybe using p equal 0.01 rather than 0.05 to take that into account. I just don't know how Mahalanobis distance values behave when the distribution's non-normal. If somebody has a reference to that, it'd be great. So day 5 and day 1, we're quite confident that there's some abnormal trading activity. So insider trading, if I had to guess, I would say yes, based on these data and based on these analyses. And this happens quite frequently. Anyway, I'd be interested. I haven't researched this extensively to find out what other people are using to detect insider trading. So the various organizations and bodies that are responsible for doing that, I don't know what they do. And I researched it a bit on Google Scholar, and I couldn't find a lot, to be honest. I couldn't find a lot of what people use to detect insider trading activity. I think this is probably a relatively robust way of doing it. I could be wrong, but I think it's probably about right. Anyway, I hope you enjoyed this, and yeah, if you're ever suspicious and just want to do that for fun, it's a pretty easy way to test the hypothesis statistically. Thanks for listening.